In this particular video, we'll be discussing actual details, how to step-by-step qualify yourself in an FHA transaction. The next video, we'll discuss how to qualify yourself in a Fannie Mae Freddie Mac transaction. And then in the last video, we'll talk about non-QM loans, which is like no doc and reduced income qualification. So without further ado, let's get started. This particular form that I'm going through, what you won't be able to see, you'll be able to go onto our website at rc-advantage.com, go to resources and then library, and then you can print this form or you can use it on an Excel spreadsheet and actually qualify yourself on all of the products we're going to be talking to you about in all three videos. So without further ado, let's get started. So if you're qualifying for an FHA loan, the first thing they're going to want to know is what is your income. So the income in this case I've used is $9,800. It's going to be all the income you earn that you can qualify with. Qualifying income means all income you have earned for the past 2 years in general. If you're on a salary, you can use your actual salary that you earn monthly, and we're always looking for monthly income. Everything we're doing is going to be on a monthly basis. If your income has changed, you're not on a salary, generally they're going to average you over the past 2 years, whatever your average income would be on your W-2s plus your current pay stub. So, for instance, if your W-2s are going to be 24 months, and if your pay stub is through the current pay period, that's going to be through April 15th. So that's 3.5 months. April's not finished yet, so that would be 3.5 months. So you would take your total income, your two W-2s, your year-to-date income, and divide that by 27.5 months. And then the difference would be your income. Now, if that's all too complicated for you, just take your hourly wage and you can get a general idea of your qualification within probably, $5,000 or $6,000. So just take your hourly wage times $40 a month. If you make any overtime, you can use that if you've been earning that overtime for at least 2 years. So put your overtime in there also and use that for your monthly income. Okay, we're also going to assume you have $450 in debt. Now, on a FHA transaction or any Fannie or Freddie Mae transaction, the debt is any monthly payments that you make on credit cards, installment loans, car payments. It does not include your utilities, does not include your cell phone, does not include anything like that, only your actual debts, credit cards, installment loans, unsecured loans, anything like that. In this case, we use $450. The next thing we're going to want to determine is the purchase price. So let's just say you want to get an idea of what you qualify for. Let's just start out with $500,000. On an FHA loan, you're going to use 3.5% of $500,000. So you would take $500,000 times 3.5%, or you can do $500,000 times 96.5%, and that'll give you the loan amount. That loan amount is $482,500. Now, keep in mind with FHA, you have two forms of mortgage insurance. So FHA is more expensive than mortgage insurance than a regular Fannie Mae loan, but don't rule it out yet. We're going to tell you why you may need an FHA loan. Just because it's a bit more expensive with the mortgage insurance is not a reason to rule it out, because the rate's much lower than a Fannie Mae or Freddie Mac loan. So you take the loan amount, which is $482,500, and times that by 1.75%. So the mortgage insurance, when you do that, it becomes $8,443.75. The next step is you add those two together, and that comes up with a total loan amount of $490,943.50. Now remember, I'm going to have a special sheet that you can go to, so don't get discouraged if you're not writing all these numbers down. And the actual sheet, Excel sheet, actually tells you how to add the columns together. It's very intuitive, and you'll be able to do exactly what I'm doing here using the sheet if you follow the video again. So let's just do it that way. So after the fact, you can run that sheet with this video together and figure out how to qualify yourself. Let's use a 6.5% interest rate, which is pretty much what FHA is now. Now you're going to get a mortgage calculator. If you don't have a regular mortgage calculator, generally you need a financial calculator to figure out how to do this. But to make your life easier, you can go into the Play Store and get what's called the Carl's mortgage calculator. Carl's mortgage calculator. Get that, and you'll be able to do a mortgage calculator and factor these payments. So what you do is you go in and factor in the interest rate, the fact that it's a 30-year term. So you remember, you're always working with monthly when you're qualifying yourself. So you put in 360 months in the mortgage calculator, your interest rate of 6.5%, and then you're going to figure the payment, which is going to come up with the P&I. The principal and interest payment is, or the P&I, is $3,103.09 on this loan. The next thing you want to do is figure the property tax. And again, the Excel spreadsheet has all of these numbers and all of these percentages figured into it, so it's very easy to use. The property tax, you take the purchase price times 1.25%, and that number you divide by 12, and that's your monthly property tax, $520.83. The next is your hazard insurance. Now, if you're not in a high fire area in California, generally the hazard insurance premium is going to be 0.35 of 1%. So that means that you take 0.35 of 1% on your calculator times the loan amount, and that's going to give you your annual amount, and then you divide that by 12. And that's $140.72. And again, this is all figured on the Excel spreadsheet for you to figure these calculations. Then you're going to have what's called the monthly MI. What that is you take 0.55% of the loan amount, divide it by 12, and that's $143.19. The total payment is $3,907.83. Now, that number, that 3907, is what we call the PITI. It's principal, interest, taxes, and insurance. That number you take and you divide by your monthly income. So you take 3907.83 divided by 9,800, and that gives you what's called your front end ratio. And that front end ratio is 39.9%. So in this case, you would qualify for an FHA loan, at least based upon the front end ratio. FHA will not go over a 46% front end ratio. So in this particular case, if your actual debt or your actual principal, interest, taxes, and insurance was $600 higher, you couldn't qualify for this particular loan. But as it is, you're at 39.9%. Now you have to figure what's called the back end ratio, which includes the rest of your debt. Now all you do is you just take your $450, which is your monthly debt, and you add it to the PITI. So that's $3,907.83 plus $450. The total debt you have, which is now becomes your back end ratio, is $4,357.83. So you take that $4,357.83 divided by 9,800, and the back end ratio is 44.5%, and that's plenty to qualify. If your front end ratio, folks, is below 47%, you can go up to over a 56% back end ratio in FHA, and that's why, folks, we like to use it. Because on a Fannie Mae transaction, you can really only go up to about 45%, and in some cases you can exceed it. But if you do, you have to have reserves built in, additional cash reserves for 12 months, PITI times 12 months. So in that particular situation, we'll go into that in more detail when we talk about the Fannie Mae qualification. So anyway, there you go, folks. There's your FHA qualification. Go ahead and go to the website and go to the library, resources library. Again, that website address is rc-advantage.com. Click on resources, then library, and get the Excel spreadsheet and run this video over again and go through and put your own information into the Excel spreadsheet. Thanks for listening, and happy shopping.